Staying alert about NFT could be for money laundering transaction tool. The US Treasury Department on Friday issued a series of recommendations to combat illicit financial practices. In this case, money laundering in the high-value art market. Therefore, the US Treasury has warned emerging digital art markets, such as non-fungible tokens, as being vulnerable to new risks. In a study published on Friday, the US Treasury found that there is some evidence of money laundering risk in the high-value art market. However, the evidence is still limited as to whether this money laundering carries a risk of terrorist financing. It said those most vulnerable in the market were businesses offering financial services that were not subject to anti-money laundering or countering terrorism financing obligations, warning that asset-based loans could be used to disguise the real source of funds and provide liquidity to criminals, an official said. Senior US Treasury Department, quoted by Reuters Sunday, February 6, 2022. The acting senior said that the next step to take to avoid the practice would be to engage stakeholders through Congress or in industry to get their feedback. He added that the Treasury hopes the research will encourage the industry to take additional steps to make it harder to launder illegal money through the art. In fact, the Ministry of Finance will give further thought on whether to issue additional regulations to monitor the game in the NFT market. Reuters report also stated that in a recent study, digital art markets such as NFT can present new risks because the characteristics of digital art make them vulnerable to money laundering. NFT is a form of crypto asset that exploded in popularity last year. All kinds of digital objects, from art to videos and even tweets, can be bought and sold as an NFT. Which uses a unique digital signature to ensure the object is unique. The study recommends considering several options to address the risk. Including updating training for law enforcement and customs. Increasing private sector information, sharing and implementing anti-money laundering, and countering terrorism, financing requirements to certain participants in the arts market.